The market consolidates in a tight range. Where do we go from here? Find out next on Invest with Jacob. The market traded up to its all-time highs twice today before briefly flash crashing down at the close. This gives us a couple of teaching moments as well as our market update. We'll get to that in just a minute, but first, welcome to the show, guys. My name is Jacob Gabbard. This is Invest with Jacob. If you're new here, I highly encourage you to hit that subscribe button so you can get our daily video updates as well as our trade setups and our buying opportunities. So today we saw the market go to its all-time highs twice and then flash crash at the close. Let's jump into the chart and take a look at a couple of teaching moments. Okay, so here we are in the 5-minute SPX chart. And the first thing I want to go over is what's called a reverse feedback loop squeeze. And essentially what that is where one side, the bulls or the bears, are trying to push through their level and they can't, and the other side takes the ball and runs with it. Okay? So open today, we came down, we tested 41.85 immediately. We raced up to almost the all-time highs, and then came back down, tested 41.85 here, came up, tested it here, 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 and here. And what happens is when the bears can't push through this level of support, eventually the bulls take the ball and squeeze them out, and the market moves up quickly in a rapid motion like it did here. So this move here is the squeeze, okay? If you can see that. And so when they do that, essentially, usually what happens is the market continues higher up to what we were targeting at 4,200 because you squeeze out all the bears. Everybody who has puts and shorts has to sell, and when they sell, that means they're buying the market to get out, which pushes the price higher. So that's what happened here. You had a squeeze up to the all-time highs. You made a 2-cent new all-time high. Hooray! And then we had this flash crash here. Okay. Now this here is indicative of options closing. So it's at the end of the day. You have a lot of bulls here going long on the short squeeze. They think the market's going to do what I said and move up. They're trying to make a whole bunch of money. And the market says, you know what, we're not going to do that. And they crash it down. Okay, the institutional investors have algorithms and they crash it down just like they did here. It pokes through support just like it did. So it got through 41.85 and immediately reversed back above support. Now, why is that important? Because what happened is all of these bulls that were chasing this squeeze put their stops at 41.85 because that's support. So when they poke it down here, that stops out all of their options, all of them lose, and then the market resets itself and comes back up. So that's what happened at the end, was this little flash crash to reset the options at the end of an options expiration day, and it really kind of screws over a lot of people who aren't paying attention because they get poked out, they lose all the gains they had going up here, and the market just kind of, the institutional investors kind of just get to win because they have the power and the money, and sometimes that sucks. So that's what happened to short-term investors, day traders, people who had options expiring today, people who were playing this squeeze. They all got wrecked right here, and then the market squared itself and went flat. And guys, if you're not already, I highly encourage you to join my Facebook group. I'll leave a link in the description where I give real-time market updates where I discussed today actually the reverse feedback loop squeeze before it happened. And then I give other updates on levels and moves and what we're expecting during the day. So click that link, join the group. The only requirements are that you subscribe to this channel here and you like my Facebook page. So we traded in a really, really tight range today, guys. 12 points top to bottom, and never really could extend itself either way. But it's essentially high-level consolidation, which is great. Consolidating at the highs or around the highs just means we're getting ready for a move up. In most cases, there's no absolutes in the market, but tends to be up, and we should see that today. I think today was about options expired. Yeah, we should see that today. Yesterday was about options expiring, and today is going to be about making that move toward 4,200. Now, the market update is essentially the same as yesterday. 4160 is our key level, and if we hold above that, we should be pushing higher to 4,200. When we hit 4,200, I will safely say we are definitely done with wave 4. We don't have to think about it anymore. But until then, it's still in play in the back of our minds. So 4,600 is the key level, and we're watching that. 41.85 is still our immediate support. It held all day today or yesterday, and that will be what we're watching. So if we break that, the next level is going to be 41.70, and if it breaks that, we're headed toward 41.60, and that needs to hold, or we're going lower. Okay, that's the market update for today. Those are the key takeaways. Good luck out there, guys. We will talk tomorrow.